Get straight to it. Mangalam.
Yes, when it rains, it pours. It is at the low point of trade for the frontline index. Bulls would hope that it does not turn out to be a freaky Friday for them. But the first earnings that we have on our show today, V-Mart Retail reported a steady June quarter. The street was prepared for a 12.5% revenue growth because the company had said in its first quarter update already. The profits jumped manifold on a low base. The stock under pressure today, but was a big mover in yesterday's trading sessions. The CFO, Anand Agarwal, joins in. Thanks a lot, Anand, for joining in. Always a pleasure speaking with you. You had told us in your update that your same-store sales growth adjusted for Eid was close to around 5%. I have a quibble around that, you know, when it was great, you did not say that it was great because of the presence of Eid, but now that it's not great, you've said that if you adjust for Eid, it would have been 5%. That's not you, that's the entire sector that did that. But be that as it may, all the festivities done, monsoons are good so far. How is second quarter and more importantly, second half looking? Can you do better this year than what you've done in the first quarter?
Absolutely, yes. I think just to put things in perspective, we also have all the festivals this year preponed. So just like Eid got preponed to quarter 4, we also have Durga Puja, which will also get preponed into quarter 2 this year. So therefore, quarter 2 should also look better. And definitely, I think the kind of traction and the kind of footfalls that we are witnessing on the ground, we are looking at slightly better performance. I can't share the numbers, but definitely we are looking at slightly better than what we did last year.
What would it mean then? SSG growth for the year? What's the target?
I think we will still maintain mid to high single digit for the full year. Let's gun for better. But I think that is something that what we delivered last year, and that is something that we would want to better this year again.
Okay. And what does it mean in terms of revenue growth and margins?
I think revenue, we should still look at, mid-teens to high teens full year level. Margins, I think, will again remain a function of how much we are able to do on the SSG. So should remain range bound, but we are optimistic that we should be able to improve on margins as well.
All right, you're expecting margin improvement with mid-teens revenue growth, high single digit sort of same-store sales growth that would come by this year as well, mid to high single digit. If you could give us a sense on a couple of other parameters as well. You know, what really stood out in your first quarter was the footfalls. That increased by about 14%. Your average sales price also increased by 1%, as did your conversion. Are you giving out any targets for this as well this year?
So there are a lot of targets that the teams are working on, but too early and too premature to share that with the street. But definitely from operations perspective, we are working on 3 major pillars. One is on the product side, where we have drastically improved our product profile in terms of the coverage, the fashion quotient, the pricing, the availability and the supply chain and all of that. The second part is looking after the existing stores, how well we can redo the existing old stores, so give them a fresh touch, become more competitive in the market. And third is getting into the expansion mode. So we are pressing the pedal on expansion. We're looking at much higher, more robust growth in all parts of the country. So we are looking at, regaining some lost ground that we did post-COVID. So right. All these 3 areas, we're really working very hard, and I think results should start coming up now.
You know, you've given me a lot of streams of thought for all these areas itself, and I'll just pose that as a question to you. The first one is, how have the economics of a new store changed over the years? Because you're planning to add 50 to 60, 65 stores every year. Some stores become old, you have to replenish them or you have to refurbish them, add new merchandise. And all of this at a time when inflation is there, when it comes to manpower and, the competition that there is as well. So how have the economics of a store changed over the years, if you could give us a sense of that? And you spoke about having lost some ground. What is the moat for V-Mart going to be? Because from a shareholder standpoint, there are multiple options in the value retail, value fashion retail online, and value fashion retail in every part of the country. There are multiple options. What is the moat for V-Mart going to be?
So 2 questions here. So first, let me address the economic question. So from a cost perspective, definitely there is a lot of inflation. There is a lot of inflation in terms of competitive pressures, and there is also therefore a lot of pressure on how well we are able to source our real estate, and all of that has an implication on the running cost. So all told, I think we require around 2 to 3% of same-store sales growth to beat inflation and maintain the cost structures. And SSG of anywhere upwards of 4 to 5% brings in the operating leverage. So that's on the economic side. But coming to the moat side, I think the moat that V-Mart has always enjoyed has always been the discipline with which we sort of ensure that we don't get into any rush decision. So we're very, very disciplined and conservative on cost structures. We are very, very frugal. We are very, very conscious about not speeding up the expansion just for the sake of chasing a target. We ensure that every store that we try to open has to become profitable on day one. So in fact, in the last 22 years of our operations, 90% of these stores that we have opened have become profitable in the first month of their opening. And that's something that we really are very, very proud of and we would want to maintain. So we're not really looking at chasing just growth for the sake of growth. We are only looking at profitable growth and remaining frugal and remaining true to our nature of being a value retailer.
All right. Sir, you know, a few years ago, I recall when y'all took over Unlimited. Could you tell us on a, sales per square foot, how far is it away from V-Mart and when do you see them converging?
Yeah, absolutely. So Unlimited, when we took that chain, from Arvind, that was performing at sub 500 rupees sales per square feet. And today, it at a enterprise level, it is already delivering more than 650 rupees sales per square feet. The good part is that all the new stores that we have been opening in Unlimited brand for the last 3 years, they have started to come at par or even started to better the performance of even V-Mart stores. So thereby, we are quite, gung-ho about the opportunity in Unlimited. Unlimited, as you know, operates only in South India. So that's a brand that we have kept, preserved because it was already very well known in South India. So we didn't want to change it to V-Mart. But all our stores carry the same format as V-Mart. But the Unlimited brand only operates in South India, but it is now becoming very profitable.
All right, final question before we let you go. Just give us two numbers. One, inventory days, that it has improved in the first quarter. Do you have a target in mind for that? Go beyond the 93 mark. And the second part is LimeRoad. You've reduced losses and you have said that this is not a profit-making business for you. It is going to service your overall customers. So what is the metric that you are looking at which decides on the efficacy of LimeRoad?
So, on the LimeRoad piece, I think we've said that in the past, it remains a service center for the entire business, being the omni enabler. And I think the losses there, we have been cutting down by almost 50% every quarter. And that's the trajectory that we will still maintain. So this is more like a cost center sitting within the P&L as an IT services for the team. And the number that we look for in LimeRoad is how more we can extract in terms of organic revenue by repeat sales and ensuring that we reduce the loss of sales from V-Mart customers by allowing them to order online through LimeRoad.
And inventory days?
Inventory days, I think mid to long-term target is around 70-75 days, and we are working towards achieving that.
Take that point, Anand. Always a pleasure speaking with you. Wish you good luck for the remainder of this year, and all festivals will be preponed this year. So obviously, we'll have better celebrations in each quarter as against just a few quarters as we saw in the last year. Wish you a very happy festive season as well and festive season sales. With that, we'll take a short break, and on the other side, we'll get chatting with the management of another company. We will have Sambhav Steel joining in.